What does the recent job market trend in Canada suggest? This question has been on the minds of economists, job seekers, and policymakers alike. In February, Canada welcomed the addition of 41,000 net new jobs, primarily full-time positions. Yet, the nation saw a slight uptick in the unemployment rate to 5.8%. This increase is due to a rapidly expanding labour pool, according to Statistics Canada. This slight rise in unemployment is part of a trend we've been seeing in recent months. Even amidst broad job gains across various service industries, the rate has been fluctuating around the 5.8% mark. The food and accommodations and professional, scientific and technical services sectors have seen particularly notable job gains. However, experts suggest that Canada's job market is transitioning into an employer's market. This shift is due to the slowing economy and a growing workforce. Job seekers may find themselves with less bargaining power in this new landscape. Economists like Dawn Desjardins of Deloitte Canada and Toon Nguyen of RSM Canada have observed signs of this cooling in the labour market. They note that average hourly wages grew at a slower pace in February, indicating a possible onset of disinflation. This easing wage growth and increasing job competition contrasts sharply with the situation 2 years ago. Back then, job seekers could negotiate for higher wages amidst a talent shortage. Now, this shift suggests that employers have the upper hand. They face less pressure to raise wages due to a more competitive job market. The Bank of Canada is closely monitoring these labour market conditions and wage growth trends. Despite these trends, the central bank has maintained its policy rate, signalling it's too early for rate cuts. Yet, economists like Desjardins believe that the ongoing trends could pave the way for future rate reductions. They anticipate a less aggressive cutting cycle compared to previous rate hikes. Money markets predict a significant chance of rate cuts by June or July. The consensus among economists is a cautious approach to easing. This reflects the nuanced balance the central bank is aiming to achieve amidst evolving economic indicators. In summary, the dynamic shift towards an employer's market in Canada, coupled with moderated wage growth, suggests an evolving economic landscape. Job seekers might face increased challenges, and policymakers will need to tread carefully. They must adjust monetary policy to navigate inflationary pressures and labour market conditions. These are the key points to take away from our discussion today.